Good evening and welcome to Option Center. It is 8/1/23. Welcome everybody. Thanks for joining us here. I'm going to be showing you SPX on multiple time frames, going all the way down to 65 minutes to see what we're going to do possibly into tomorrow and the rest of this week, and also further on in the future. And I've added a few more features onto my charts, so hopefully this will work out well and it'll give you a much better a market analysis for you to make your own trade decisions. All right, so we're looking at SPX on the monthly time frame. We have a wave 1, 2, 3, 4, 5, all the way up to in this channel. We have a channel top, also a channel from 1929, a trend line there that we rejected off of, and we are retracing at this point. It's a deep retracement. We're around that 786 area. But I do think we're going to go down further, and I'll show you why on the other time frame. So let's go ahead and pull up some indicators, and really this is kind of skewed in the fact that we're making this bullish cross. So we have to leave on the fact that this wave 5 may not be the end here, and that we're actually pushing. If we move over the 5, that we're actually, this might be the end of wave 4, and then a 1, 2, ending diagonal 3, 4, and 5 to complete up there. So we have to keep that in mind. But this could be a whipsaw, but this definitely keeps the bullish scenario on the plate. So we're getting to the overbought territory. It's just a condition. So just keep an eye on that. So it lets me know that we're in a point after this big move. We're at a point where we could start to turn over from here. Okay, so also on the Elliott wave count for the monthly time frame, let's see. This is how we have our count so far, and we are definitely in a higher degree wave 4, and this wave 4 is very small. So I do suspect that this will be more of an A, B, C at least, or sideways, but I'm thinking more of like a flat pattern, ABC at minimum, or this could be a much higher degree, and this is a 1-2 setup, and we have 3, 4, 5 to begin the descent. Now that's much more bearish, but we'll play that depending on how and why. We'll see what's happening. But if this is a wave 2, if this is going for, this is a wave 4, and we're starting a 1 and a come back to 2, then we should be looking at about 2200. That's a long shot from here, but this should be a 5, 3, 5 zigzag, where the this C wave would be impulsive and a much bigger wave than this this AB here. So from this top of A down to the bottom of B. Okay, so different ways to look at it from the bearish aspect. The bullish aspect, I'm not going to go over it, but we'd be in the middle of wave 3. And this wave 3 should just continue on without stopping. It should make a new high. And then the wave 4 should cross over wave 1 and continue to the upside from there. So, and we'd create divergence from here. But that's neither here nor there. We're going to go ahead and move down to the weekly time frame, and just this is where we'll be keeping a close eye on the weekly and the daily to kind of see what to look for. See, we had our bullish divergence here, started to push up. We played that out already. We're into this this zone for the rising pivot, where we easily could have a reversal from that point. That's this would be a perfect area. It doesn't have to be on there. It's a zone. That's how it works. Just like this, popping over and coming back under. Well, we're retesting that area right now. And so we're already looking at our histogram on the weekly time frame. We're looking at the histogram, and it's just now starting to peak. We have negative divergence on the RSI. That just means that we made some highs here, and then with price going higher on the RSI, we're making a lower high. So that's a negative divergence. That's a sell signal for us. We don't have a crossover here yet on the MACD. Until we get that cross, we're not going to get that confirmation that the weekly has reversed We're also getting to a tight range here, and we have divergence here in the stochastic as well. And the stochastic, as soon as we get across underneath this this line here, it's this 80 line, then that will be another sell signal. So we're looking for all sorts of signals on the weekly. We're just now starting to get them. Let's see if we have anything else. We'll go ahead and look at a little bit closer on the Elliott wave count. And this is just what I have here for the minimum for an A, B. At the top of, if you have this 100% retracement from the top of A down to the bottom of A, all the way to the top of B here, then your 100% move, and also the 618 retracement from the COVID low, that would be that 3,200 area. So we'll definitely get a reaction off of this if we make it down to this point. And I do believe we are going to come down here, but this would be the minimum type of A, B, C, perhaps a flat pattern. You can count this in 3 waves or 5 waves. There's both ways that I've seen it all over the place. So you have to watch price in order to determine. It's kind of 2020. You don't know what your actual count is until it actually happens. Okay, but we are on the road path to this being either A, B, and a much larger C, or a 1-2 setup, and where we go down again all the way down to that 2,200 area, whole 1,000 points underneath there. It sounds insane, but it has happened before. Okay, let's go down to the daily time frame. We're going to spend a little bit of time here. Let's go, trend is our friend. And this is just our regular technical analysis. This doesn't count yet. This downtrend line, I'm putting it at the top here, assuming that we already made our top. And we'll see what happens in the future. But this downtrend line is not valid yet. It has not made a reversal. I mean, we have a reversal candle, and we're still inside that candle. So we need to see which way we're going to break. Either we break up from that candle, we continue this push with the divergences, or we actually break down from this candle and determine that we have made our reversal on the daily time frame, which should also continue to be on the weekly time frame as well. We do have here divergence on the MACD, so we're starting to barely get that crossover. It's just moving sideways at this point, but you see the histogram is starting to move lower as price is moving higher. Same thing with the RSI. We are getting the I'll put on a few more of these. Let's see, sorry, that little bar isn't come down there, but the RSI, again, divergence. As price is going up, we're making lower highs in the RSI. The stochastic, we had our crossover already, and we're just price is trying to push up higher. We'll see if we make another lower high here, but until we get this to cross back over, then it looks just kind of like we're just bouncing off of trend lines, and price doesn't go straight down. And so these trend lines are very valid. I like to keep these on the RSI and keep these on the slow still. I have it on a different board, but that here I'll put on this one. Trend is our friend, and I have the slow and the fast stochastic, the RSI and the slow stochastic on here. And at this point, we can see the divergences there, and on the slow as well. And as soon as we kind of break down from this trend line headed up, then we should see some movement to the downside. And I have these indicators actually customized to my preference for the 6 on the RSI and the 12 on the Stoke, the 6 on the RSI. I kept the MACD the same. So let's move to another board here. Let's go with the Elliott wave pattern on this one, and let's get rid of those indicators. So we made it up here to the 786 retracement from the all-time highs, and this is kind of giving us trouble, but it's acting as support here as well. So you got to kind of leave it there and use that. And once we get under that 786 area, then we should start breaking down at that point. That should be our confirmation. And what we're looking at from this point is this is a possible 5-3-5 zigzag for a W, a three-way move down, and then a 5-3-5 zigzag up here as well. I could make it so this is a B C, and then this is the B, and then this is a 5-wave move up here too. So it doesn't really matter WXY or ABC. We're just getting to the point to where we see that the count is getting to a conclusion, and this is possible a wave 4, but I do actually think this is a impulsive move down for wave 1. Okay, and we'll see that on the 65-minute. All right, and after we get our turn, when we do, the big area here that I want to keep an eye on is the old 50% retracement here. Also the 382 retracement if you're coming from bottom to top of this move. If you think this is going to be a wave 4 pullback, you shouldn't really get to this area. You should be around this 4,300, but it's valid to come here, but you'd be crossing over, and that would, that would kind of invalidate that being a 1-2 setup there, or excuse me, a wave 4 setup. So let's see if we can show you something else on here. Again, this isn't my usual format. I'm glad that I put all these things on here because it really helps put things in perspective. But we have our Elliott wave. We have our trend is our friend. That's our traditional. We also have expected moves for the week. I've always had these on there. The expected move just kind of gives you that playing field, right? So this expected move from the options market, and it gives me a playing field of what's really going on. If we're moving sideways, then you just kind of see that the options expected move are going sideways. It gives you a handle on if the market is being efficient or inefficient. And when we break much higher than the expected move, like here, for example, you have the start of the week in the middle, and the options market depicts whether the move should be down or up a certain amount of points. And those would be the same, but with no bias. Okay, and so the market starts ripping out of these this top area, the options expected move. I do put these in here. I learned that from TheoTrade. I was a part of TheoTrade for quite some time, so started using the options expected move. And this is inefficiency. When price cannot stay within the options expected move, that's very bullish. The market's just ripping apart, right? So we go sideways. You see options expected move down here, up here, down here. That's just sideways market. It's just showing us that things are moving sideways. But again, and now this is a little bit more efficient when it starts staying within the range, stays within the range, stays out of the range again. Bullish. You can tell, holy cow, we're starting our move much higher. Now we haven't made any type of reversal, but this week we haven't gone and done anything yet. So we're still likely to make the options expected move of 45.30 or the options expected move of 46.35. It is highly likely that we would touch one of these sides. That's what it's kind of saying to us. And usually it's a good time to take off some risk if we do make it to that point. If you're playing puts and you get down to this point, it's a good time to take off some risk because it's not likely. It's just unlikely that the market will push much lower through it. Now, I know that when the market's going to the downside and we get really bearish and volatility picks up, you're gonna see it rip through the bottom of the options expected move. But again, it's just probable. It's probabilities that it won't move through that. All right, and I think that's it for this board for the daily time frame. No, let's go ahead and go back to, let's go to default. And so we can check out, you see we have divergences there. So we can check out some of these. So we have the options or the auto expected move. We could do that on the daily time frame, but not for SPX. I have that available now. We have what I call trendy. This is checking out our trend. let's see, there we are. So this has the Bollinger Bands, and you see we tapped 3 times on the Bollinger Bands, and it's just highly likely that we will get a reversal off that third or second tap. We hit it again, and so we got our reversal. From what I think, we already in our reversal. You see the ADX where it shows that the market is trending at such a high peak. It doesn't go up there often, but you see where it's at right there. And when it got that high, you saw that how it was time for the market to correct. So we're kind of in that range now as well. So I could see the market coming back to test. Super important, this 4,200 area where it's the middle Bollinger Band. You have the 200 exponential moving average. You have the 200-day moving average, a simple. This is a bar we've been watching on this channel for just forever. And so I think the market naturally wants to retest this area. That's what we'll be looking really stress this point at the 4,200 area. I don't think the market's going to go much higher. We have the MACD, obviously that's a trending indicator as well. And so this is my trending model. And then we have the McClellan oscillator, and that's showing right here where we have, I think we should move over to trend. Trend is our friend on this one. We're showing some divergence here as well, once again on the oscillator. And you see what happens most of the time when that divergence starts to happen. We get back underneath that 100 area right there. We're back under it now. I think we get that reversal because of this move and divergence. It happens almost every time. Sometimes it takes it just a little bit more to the downside all the way, which we did get down there anyway. I think that's a good indicator that we'll be reversing soon as well. And let's just go ahead and do the, if this will cooperate, let's do the summation as well. If not, we'll just move on. Okay, we have our McClellan summation, which is just takes the average of those days. It's an oscillator there. So we have that back to this extreme bull area. We're not quite there, but we're making a lower high as well. And I want to point that out, that this is a definite divergence as well. So I don't think we go much higher than here. You see where the peaks, I mean, it can go into this red area further, but you see where it can peak constantly there. And we'll check out, we'll put a trend line here eventually, and we'll make sure to see if we will probably start to triangulate into the bullish bearish territory from a trend line. Actually, I'll put it in there right now as we speak, just so you can see what I'm talking about. So we have this trend headed up, and when we do get our turn, we'll have that trend line pushed down here. We'll probably oscillate through there, and we'll be able to see, hey, if it breaks down from this trend line, we're going much lower. If it breaks back up above that trend line, then we have some more up moves to go. Okay, so now we can leave that alone and go to just our regular options tender here, and then we'll go